Whales are buying up this altcoin. Big announcements are coming out of Binance Blockchain Week, and Bloomberg ETF analysts give a predicted date for an approval. This is your Altcoin Buzz News. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. If you haven't checked out our Altcoin Buzz Alpha membership, now may be the time. We've had an insane October where we're up 35% on Bitcoin, 2x on our top mid-caps, and 2x on our gems. Over $1,000 in profit from the Celestia airdrop, and over $650 in profit from our buy and sell calls. That's almost a 200x ROI on the Altcoin Buzz subscription fee of only $15. To find out more, check out the links in the description below. Bitcoin saw classic price volatility into the November 7th daily close as a short squeeze took the market near $36,000. Shorts felt the heat as Bitcoin made swift gains to top out just below $35,900. Analyzing the situation before the move, trader Skew argued that momentum would increase quickly should $34,800 return, a sequence of events that then came true. Trader Dan Crypto Trades meanwhile eyed what he described as an interesting shift in derivatives composition. Traders on the largest crypto exchange Binance were positioning themselves bearishly compared to exchange Bybit, but a long squeeze was far from certain. He said Bybit perpetuals have consistently traded higher than Binance. There's been a clear long interest on Bybit, while Binance has been more short-oriented during this range. One thing is clear, and that's that Bybit traders are more bullish than Binance traders. James Safer, ETF research analyst at Bloomberg Intelligence, predicted that the U.S. Securities and Exchange Commission may potentially be ready with a decision on the spot Bitcoin ETF approval as soon as November 8, 2023 until November 21st for various filings. In a recent interview, Safer said the US SEC would be careful not to announce a loan filing approval to avoid giving out a first mover advantage among all the 12 companies vying for the first ever Bitcoin ETF approval in the United States. He reiterated the previous prediction odds at 75% by the end of 2023, but warned that there could be a bunch of approvals together when the announcement comes out. He said, "We think the SEC is going to try and allow most, if not all of them, to launch on the same day, and they're not going to play kingmaker." The final deadline for ARK21 shares Bitcoin ETF falls on January 10th, 2024. Safer added that it's unlikely that the SEC will deny ARK's filing by January 10th and then approve all other ETF applications in March 2024, hence making the case for a decision either in November or December of 2023. Speaking about the custodian methods Bitcoin ETF providers could use, Safer predicted that companies would be distributed among the likes of Coinbase and Gemini when it comes to their crypto custody. He explained that the flip side to it would be having the supply off-chain, leading to a rise in demand to supply ratio of Bitcoin. Also, the Bitcoin halving scheduled for the second quarter of 2024 would only further reduce the Bitcoin supply. Also, make sure to check out Randy's TA video on our Altcoin Buzz trading channel to see what altcoins he's been trading recently. Our partners at TomiNet have just announced at Binance Blockchain Week that they'll be launching their own Layer 2 scaling solution on Ethereum. The chain is a fork of ZK Sync with the goal of scaling Ethereum, but in a more freedom-loving way. Tomi's blockchain will do what many Layer 2s do, like use zero-knowledge proofs to shield your Layer 2 transactions from the Ethereum network when they go there to settle, or scale much faster at 2,000 transactions per second. But that's not all it does. There's some cool things that TomiNet will do that other Layer 2s don't, such as break down and separate gas fees so it's cheaper for new apps to deploy, as well as streaming payments and automated or recurring billing for subscriptions. They'll also have a no-code token generator, and this allows DAOs or other projects to issue tokens inexpensively but still on the most popular smart contract network. They'll also have a shared gas fee model where network token creators and wallet developers all share in the fees to sustain the network and the projects. And the biggest one is native integration with DOP or Data Ownership Protocol. Of all things, Ethereum is not as censorship resistant as most of us would want, but TomiNet will bring more censorship resistance to Ethereum. The native integration with DOP is what unlocks this for us. With DOP, you control how much of your data you show to others. It can be all, some, or none. The Tomi team says they intend to have their white paper on TomiNet ready before the year end, and the testnet and mainnet will follow in Q2 and Q3 of next year. TomiNet gives users what they want, the speed, scale, and low fees of a Layer 2 with the data control that people crave. For more information, check out the links in the description below. Marcus Thielen, research head of Matrixport, noted in a report this week that Ether broke out from its downtrend and could head towards $3,000 as the recent altcoin frenzy revitalized network activity. He said revenues for the Ethereum ecosystem are bottoming out from depressed levels, and this could signal a tradable bottom for ETH. Ethereum's weekly revenue, which is income from the network transaction fees, also known as gas, recently rose above $30 million for 2 consecutive weeks, up from a yearly low of $12 million hit in early October. Thielen set a $3,000 price target based on technical chart patterns, saying a tactical bullish trade could have merit for as long as weekly Ethereum fees stay above $30 million. The bullish outlook marks a pivot from Thielen's bearish views on ETH in September, where he cited deteriorating network revenues and user activity. Indeed, Ether early in October declined to 7-month lows, where its relative valuation against Bitcoin tumbled to a 15-month low. Alongside a major rally for Bitcoin and the rest of the crypto market since, ETH has bounced roughly 20%, recently trading at 1870. Capital rotation from Bitcoin to altcoins helps spur user activity on Ethereum, which is the foundation of many decentralized finance protocols and decentralized exchanges. The network settled $250 billion of asset transfers last week, the most in value since the mid-March regional banking crisis. As a result of soaring activity on Ethereum, blockchain data shows that more ETH was burned than added to its supply over the past week, turning the token deflationary after 2 months of being inflationary. In a remarkable show of resilience, Chainlink's native token Link has embarked on a meteoric ascent, surging an impressive 84% since its October 20th low of $7.30. The digital asset's price reached just above $13 on November 6, marking its highest valuation since spring of 2021. With Link's price up 160% from its position on June 20th, the pressing question for investors is whether the bullish trend will propel it beyond the $15 mark and set new records before year-end. Rat Capital on X wrote, "The macro downtrend is over, the macro range is over, and no new macro uptrend has begun." The foundation of this rally seems to go beyond mere speculation. On-chain metrics provide strong evidence of a robust, lasting uptrend. As analysts delve into blockchain data, there is a growing body of evidence suggesting that Link's price surge is not a short-lived phenomenon, but a sustained advance, possibly extending past the $15 threshold. Sentiment data reveals that retail investors are actively buying. The group with a minimum of 1,000 Link tokens in their wallets has reached a new all-time high of 27,152 wallets. Cross-referencing this data with Into the Block's insights, we can confirm that this particular group has exhibited the most significant growth in the past 30 days. There has been a remarkable 2.29% increase in the number of wallets holding 1,000 Link tokens. Additionally, the group of wallets holding between 1,000 and 1 million Link has seen a nearly 2% rise in number during the same period. On the flip side, Link whales have seen a reduction in their share of the supply, with the holdings between 100,000 and 1 million Link tokens witnessing a 2% decrease. This shift could suggest a transfer of ownership from institutional investors to retail participants. While large holders likely acquired their holdings over a 500-day period, it appears that retail investors are now actively pursuing Link at its current price levels. However, the market is showing a clear demand for Link at the moment, and it doesn't seem to be oversaturated. Data from in-out of money indicates that the overall profitability percentage remains relatively small, with approximately 53.78% of addresses currently holding Link tokens in a profitable position. Analysts are closely examining wave patterns, suggesting that Link may be in its third wave of a 5-wave upward impulse. If the token avoids a sharp decline and instead opts for a gradual descent, holding above the $10 level, there is a promise for a sustained rally, possibly reaching a 5th wave high. At the same time, another coin with huge whale activity has been the Graph's GRT token. Sentiment wrote that the Graph has nearly doubled since October 19th, and there has been major whale movement and new addresses being created. So we'll have to keep an eye on these two tokens this week. That's it for your Altcoin Buzzies update. I'm Cody Buffington. Thanks for watching.